how it's a new week and new lows for the INR against the US dollar, where the rupee extended losses to breach 88.33 versus the greenback for the first time ever. You're looking at some of the key details on your screens at the moment. In fact, tariff jitters and the FII outflows are triggering the rupee rout. Now, last Friday, let's tell you that the rupee fell below the 88 mark for the first time ever. However, RBI's intervention helped the rupee end flat. How are we decoding this? Or rather, how is Jamal Mecklai, Managing Director, Mecklai Financial Services, essentially looking at this and the way forward? He joins me on the show this evening. Jamal, thank you very much for taking the time out and joining us here this evening on ET Now, on News Now to be specific. Let me begin with the aspect of the numbers that we're looking at. It's in fact the 7 decline in the last 8 sessions. From your vantage point, is this simply a near-term shakeout, or are we witnessing the start of a more structural shift in the rupee's trajectory?
Well, it's difficult to tell. Frankly, when it fell on Friday, I was very concerned. But the good news is that it did not fall today, right? And if you look at the NDF did not weaken substantially at all. In fact, it was not even as weak as the onshore. So that's encouraging. I mean, obviously, everything is driven by the tariff madness. And I mean, there's a risk, naturally, if exports are reduced substantially with the 50% tariff in the US, that there would be a shortfall of supply here. And the good news is RBI has got plenty of reserves. And in the last year, I guess, they've been very strong and creative in using it. My belief is that they should not let it fall too much lower than it is today. But, I mean, of course, the market is the market, and the market will put its own pressure on. See, the positives are what? The positives are that the FIIs have drawn out a huge amount of money already, right? Of course, Indian equities are still overpriced, you know, so people are not coming in. The only thing I feel is that we may start seeing, not immediately, but in the short term, in a few, say, month or two, money coming into debt, because it looks like now, since it's become very clear that the government has to make some substantial changes, right? In other words, my belief is that, you know, the budget deficit, which had been so well controlled and was on its way to the target of 4.4%, is going to have to go up. Because, you know, we can't continue to ride this sort of the way we have. It's time to make change. You know, whenever there is a crisis, and there is a crisis, that's when people act. So I think I would look for the government to make some sort of substantive investments in education, focus on agriculture, healthcare. Now, all that's going to cost money. That's going to make sure the deficit does not continue to fall, which means likely interest rates will not fall. And that's not good for a lot of people in business, but it may help support the rupee.
You know, Jamal, as you point that out, and taking a cue from what you mentioned also, because what we did see is as to how the RBI did step in on Friday to calm the slide, in fact. But in your view, is the central bank's current light touch approach the right call, or is there a case for a more visible line of defense? What do you make of that?
See, ultimately, you know, it's a very, very fluid situation. You know, nobody really knows what's going to happen. Trump may come back and say, TK, 25% tariffs, right? So basically, now is not the time to like go all out in either direction. You need to see how it evolves. I mean, there's, you know, obviously smart, committed people at RBI. So they're waiting and watching, which I think is a very sensible approach. I mean, I would be very happy to see them push it north of 88, but I don't think it makes sense for them to do it right now. You got to listen to the market.
Fair enough in terms of what you're talking about, the unpredictable. Yes, Mr. Jamal, go ahead.
No, I was just saying, you know, the market is the market. You know, you don't know what it's going to do tomorrow, right? And certainly when things are up and down like this, it doesn't make sense to put all your, it doesn't make sense to make a big bet right now. You got to wait and watch and hold, you know, play it sort of like that, which is what they're doing, which I think is very good.
Absolutely, which is the wait and watch game that we do understand, at least as far as Trump is concerned and the tantrum. But that's something that I also want to take across to you, given the uncertainties with the tariff with the US, the continuous FII outflows that we're looking at, and the higher crude prices that are all weighing in on the sentiment. In your opinion, which of this is the most decisive drag on the rupee right now? Is it just the tariffs?
I think clearly it's the tariffs. I mean, it's the tariffs which is creating uncertainty, which is saying we don't know what, nobody really knows what the hell is going to go on. Clearly, if the tariffs stay in place, and it looks, you have to assume they will, exports will suffer, which means there will, as I said, be the balance of supply and demand will be against the rupee. But I mean, fortunately, as I said, there is a lot of reserves. So, but we have to see how it plays out. You know, I mean, anything can happen, right? And you just got to make sure. I mean, this is what RBI gets paid for.
Talking about the other aspect of this, Mr. Jamal, is that compared to other Asian peers, what we do see over here is that the rupee seems to be under sharper pressure despite India's relatively strong growth outlook. From your vantage point, how are you looking at this? The market sense as well as, let's say, the global investors' prism as well.
See, from a global investor perspective, one thing is clear: Indian equities are very highly valued. Everyone knows that. Okay. Growth, very good. But see, at the time, again, I come back to, you look at different things at different times. Right now, it's a very, very volatile, uncertain time. Now we're not going to say, 7.5% growth. I mean, growth is when things are going well, say, okay, now I'll come in. So I think really what we have to focus on is taking care of ourselves, getting our house in order, which frankly, it hasn't been. Right? I mean, we've been carrying on about fourth largest economy in the world, et cetera, et cetera. But the reality is there's 800 million people getting free food.
Yeah.
Right? So the government has to actually take, critical steps. I won't say hard steps to make changes, to make us stronger. See, we all, probably including the government, got fooled into believing, yes, we are very strong. Well, guess what? As Trump has pointed out, we're not. The good news is the straight-ahead move with China and Russia. Russia has been there a long time. But I think it's critical that we build a proper bridge with China. In fact, I think we need to start seeing hundreds of thousands of people learning Mandarin. I mean, China is the future. I mean, America is strong and it's great and all of that. But really, China is our neighbor and it's the future. We have to build a better bridge with them. And I'm really delighted that the government is actually working, again, back to the wall, but they are working in that direction. And I think that's the answer. I mean, without that, we're screwed.
Right, Mr. Jamal. In a sense, to say that the global playbook has been, reordered in a sense. How will that pan out? Of course, only time is going to tell. But I want to thank you very much for joining us with how you're essentially looking at this on this evening show. But for the moment, we leave the conversation at that. Let's also put into perspective.